The past few months have been a crazy ride for Tesla investors. That's true for both shareholders and short sellers who've taken an absolute pounding as the share prices skyrocketed. At one point, Tesla's share price had more than doubled. Elon Musk's holdings of Tesla stock might have lost about $30 billion this year through January's close as the stock slid 12, but the next 12 months could be the most lucrative ever for Musk. If analysts are correct, Tesla will report strong financial results this year that will net Musk billions of dollars in stock rewards. Musk doesn't receive any base salary or cash bonus from Tesla. Instead, he receives stock options based on the company hitting certain financial and market value targets. Elon is in this as much as we are. How much would you need to join him in this? How soon can you start purchasing shares? Keep watching this video to find out everything. Tesla CEO Elon Musk's 2018 package allocated 101 million split adjusted shares that would be awarded to Musk in 12 equal tranches as the company hit those benchmarks. Tranches are segments created from a pool of securities, usually debt instruments such as bonds or mortgages, that are divided up by risk, time to maturity, or other characteristics in order to be marketable to different investors. The market value benchmarks have all been achieved, even though Tesla's recent slide has removed it from the list of companies with $1 trillion market cap, and 7 of the financial targets have been hit so far, with 2 being reached in 2019, 2 more in 2020, and 3 in the first 9 months of 2021. So he's already received 59 million of the 1 million options in that package. Analysts expect Tesla to hit the remaining 5 financial targets this year to give Musk all the options he possibly could get under that 2018 package. If they're right, he'll qualify for 4 of the tranches this year, a record for him, and 1 more in early 2023 once fourth quarter 2022 results are officially in the books. With Tesla's growth trajectory, I would be surprised if he doesn't get all 5 tranches this year based on hitting all the triggers, said Dan Ives, tech analyst for Wedbush Securities. Each of the tranches of options would give him the right to purchase 8.4 million shares of stock for the bargain price of $70.01 a share, the price of the stock when the options were first granted in 2018. At January's closing price of $930, that means each tranche of options would be worth $7.3 billion, and all 5 tranches would total $36.3 billion. He's very likely to qualify for at least 1 tranche of options, perhaps 2, when Tesla reports fourth quarter results on Wednesday. He should have at least 3 tranches in hand once the first quarter results are reported in April, and a 4th tranche by mid-year. However many options Musk receives in the next 12 months. He probably won't have to pay any taxes on them for about 5 years. That's because he'll only have to pay taxes on the options once he exercises them and buys additional shares, and he's only likely to do that when the options are about to expire. He did that last year when he exercised 22.9 million options that had been due to expire in August of 2022, leaving him with a record $11 billion tax bill for last year. These latest options won't expire until January 2028, so he probably won't exercise them until 2027. He hasn't yet had to pay taxes on the 59 million options he's already received as part of that 2018 pay package, and he likely won't be paying any taxes on any of the 42 million additional options he is likely to receive over the course of the next 12 months, no matter how much they're worth. Behind the biggest problem for Musk is that Tesla shares are having a particularly bad year. He owns 177 million shares in addition to the options he already holds to buy an additional 59 million shares. That's the reason for the massive hit to the net worth in 2022. Still, Forbes' real-time billionaire tracker puts Musk's net worth at $241 billion. Investors have grown worried about riskier tech stocks such as Tesla as the Federal Reserve moves to quash inflation with higher rates and less stimulus. Tesla is worth more than the 10 largest automakers in the world, despite posting significantly smaller sales than each of them. That makes it the poster child for a stock with a questionable valuation. As you're seeing investors heading for the hills on risk, Tesla shares are caught in the storm, said Ives. During a deep sell-off in U.S. stocks in January 2022, Tesla shares were down as much as 10% for the day at one point, but they rallied back along with the rest of the market to close down at only 1.5%. Still, that's enough to shave $3.3 billion off of Musk's net worth. Many analysts see the recent slide in Tesla shares as a temporary setback, Tesla shares reversed a similar slide in early 2021 to end the year up 50. Of analysts surveyed by Refinitiv, 18 have a buy or strong buy recommendation on the shares compared to 10 with a sell or strong sell recommendation. I've said that the recent sell-off in Tesla shares, down 25% since its record high in early November, makes their earnings report particularly important for investors. They'll want more information about plans to ramp up production at 2 new factories and when it plans to roll out the Cybertruck. Its pickup truck, which will be facing competition from pickups offered by established automakers like Ford and an upstart EV maker, Rivian. A disappointing report could feed into the sell-off, while a strong earnings report could turn around shares, I've said. What does this all mean for you as a Tesla investor? It means Tesla stocks, which hit a record high in 2021, are going to get cheaper. It also means that you can get as many Tesla stocks as you need to get rich, seeing that the market is spooked by a downward trend. The best opportunities for investors usually occur in periods like these when the whole world is fearful of a stock crash. So how much will you need to buy up all these stocks, keep your capital invested, withdraw what you need by selling some shares, and let your remaining capital grow? This is known as the FIRE movement, which means financial independence, retire early. Let's say you have $200,000, which you use to buy stocks, and your investment grows at 10% a year. If you leave it alone, in 10 years, you'll have $500,000. However, if you start withdrawing $40,000 every year to spend, you'll run out of money in 7 years. The amount of money needed to retire is $240,000. Tesla is expected to return 20% annually on average, given that Tesla is a company that fundamentally grows at a rate of more than 50% per year. I believe 20% is quite fair. These aren't just arbitrary figures. If you invest $240,000 in Tesla stock and withdraw $4,000 USD per month for the following 30 years, you will still save $240,000 at the end of 30 years. Why hasn't your capital decreased? And keep in mind that you only take out what you need and invest the rest. So now if $240,000 capital is needed, and you divide by how much we are sure Tesla stock will be worth by 2030 at 636, that number will come up to about 27.7 shares. You translate 27.7 shares to today's stock price of around 900. It's only 25,000 in today's money. The next concern is inflation. Well, it is a valid concern. If inflation kicks in, more stocks will go up way more than inflation. So what's the problem? The only concern about inflation should be lifestyle inflation. I have no idea what other excuses or reasons people can come up with for not investing in Tesla. All in all, there's a lot to look forward to from Tesla in the coming decade and beyond. As the company progresses on these fronts, its stock could rise further. From here on, inflation is the next issue to be concerned about. While it is a legitimate fear, if inflation accelerates, equities will rise far faster than inflation. So what exactly is the issue? Inflation should only be a concern if it affects one's lifestyle. I'm not sure what other rationale someone might come up with for not investing in Tesla. Overall, there is a lot to anticipate from Tesla in the next decade and beyond. As the corporation makes headway on these fronts, its stock may grow even higher in the future. What do you think about our analysis? Comment down below.